All right, welcome back. U.S. equity futures dropped today, extending the recent sell-off into its fifth day. And as traders stayed guarded ahead of the Federal Reserve's gathering at Jackson Black Hole, as I call it. As of 8 a.m. earlier this morning, the S&P futures, they fell 0.2%. I think they're off a little bit more than that. The NASDAQ futures were flat, but they've also fallen a little bit more than since I've written this. And the sell-off's about 4 to 5% now total in that NASDAQ. But NVIDIA, it rose this morning, and it's still even higher. So while most of the Magnificent Seven peers posted losses, it's been kind of a lick-your-wounds day. Retail giant Walmart brought second quarter earnings season to an unofficial close after reporting an earnings per share miss. They came in at 68 cents versus an expectation of 74 cents per share. Mentioned that earlier, too. Though it did lift guidance and expects net sales to rise 3.75% to 4.75% this year versus an initial forecast of just 3 to 4%. So that's good, but that wasn't enough for the market, right? The market didn't like it, and the stock dropped as those algos jumped on the old sell button. Now, my next guest, he's watching all this stuff like a hawk. We wanted to take today's eco data and the market as a whole and see what he has to think about it. So please welcome to the show, Mr. Craig Bolanos. Craig, thanks for being on. We got a few eco data points here earlier today. We've seen a little bit of a rotation out of some of these high-tech stocks. It happens, it seems like, every August. Are we weakening? Are we just taking a breather? What does Craig Bolanos have to say about it all?
We're starting the summer pause. Yes, I might be watching the data points like a hawk, but I am certainly far from hawkish. If anything, I remain dovish. I think we are going to get that September rate cut. I think we're going to get a follow-on act. I call it part deux prior to the end of the year. And I think we're just seeing that rotation after this magnificent move off those reactionary lows in April following Liberation Day. The AI enthusiasm trade, it's just running out of a little steam, but it's definitively not dead.
Okay, so this has been a great show this week today because everybody we've had has basically been in agreement on that one very point there. And it seems they say, if I'm listening to everybody today, tell me that, this happens usually around this time every year on August where people get tired of some trade and they try to call an end or a top and the likes. But no, really, it's just a chance for the market to catch its breath, a chance for you to get back on board some better trades and take it to the next level.
Well, and that doesn't mean that people shouldn't be vigilant. I mean, the enemy of staying retired is complacency, but there is some seasonality to the market, Scott. You've acknowledged such. I mean, look at this year. What did April bring? April brought April showers. And then May came around and it sprung May flowers as the market rallied. We typically get into the month of August, and here we are. It's rinse and repeat. It's sloppy in August and September until we start finding traction. Once we start getting those Q3 earnings reports coming in just before, what is typically Halloween. So what does this mean for investors? I think it's a renewed view on AI, but it's a view on this. The AI exceptionalism isn't dead, but companies and investors are questioning the cost to adopt AI in its current form, meaning is the spend going to justify the benefit? And I think a lot of that comes back to what we saw, which was DeepSeek earlier this year, because DeepSeek caused a deep freak, and those things are still with investors and traders. Here we are, some odd number of months later.
And it's like car companies back in the early 1900s. I think some people will be spending a lot of money in the right things and it's justified, and some might not spend the money well and it doesn't work out for them. What would you think about that?
Yeah, I think that's right. It's all about the appropriation of the funds. And I think what I'm consistently paying attention to is, to be involved in artificial intelligence, this story, this narrative, this transformation, that doesn't mean you need to buy just the semiconductor stocks. There's so many parts to the vertical, so many parts to the ecosystem, whether it be the data centers, the cell towers, the fiber optic networks. For those who have a lower risk profile, consider being a lender into those technology companies versus taking the equity side of the ledger, just trying to give your viewing audience some ideas because you have a thirsty viewing audience who loves your show because they love its real information they can use. So think about the different ways that you can play it. But I think everybody should be just taking a look right now because I think where the market is stuck We talked long and hard before, Scott, that I thought fair value was 6,350 to 6,500 on the S&P. We're basically there, and it's not even Labor Day. So that doesn't mean Armageddon's upon us, but it means people should be doing some rotation, which means some rebalancing.
All right. On our way to 7,000. Let's hope. All right. Appreciate you coming on, Craig. Thank you very much. Craig Bolanos, he's the co-founder and wealth partner at VestGen. All right. We'll take